Well, this is trading hour, 11 o'clock. Markets are holding very, very nicely. It's a new record high. The Nifty doing the best what it does, which is basically cruising to newer altitudes. So 23,400 plus. I'm Prashant and we'll take you through the next 1 hour. My colleague Hormuz is with me as well. Hormuz, hi. Morning.
Morning, Prashant. And it's a good day after the 2 days of the slight consolidation that we saw over the start of the week, and we tried to scale new highs, but we could not sustain above those levels. And now, finally, eventually, we get past those levels.
Absolutely. And, the market overall looking very, very good. Even yesterday, for example, the large cap indices all sold off in the last 30 minutes of trade. But the broader market did just fine. It was a very vibrant screen, and that essentially has been the characteristic. That's so much happening with individual names. And I think that is no different once again. The mid-cap index is on your screen, and I think you'll also have the small-cap index, which will come up. So like yesterday, they're up 1%, although both indices yesterday towards close sold off. But I think we've got 1% apiece on both the mid and small-cap parts of the indices. Sectorally, it's PSUs once again, 1.5% of the PSU, the CPSE index. PSU banks are leading 1.3% there. I don't think there's any help once again from private banks, not that I can see at least right now. Energy as a space is up 1%, but again, there's a fair bit of overlap with PSUs. I already mentioned small cap. Actually, I think it'll be easier to count what is down. Real estate is down about 1/3%, and FMCG is down 1/4, yeah. So just two indices which are taking a bit of a break. Otherwise, it's broadly mostly higher.
PSUs are leading the pack on the Nifty as well. The top three gainers on the index are PSU stocks. Coal India is one of them, BPCL is the other one, and Power Grid is the other one. All three of them trading with gains of anywhere between 1.5% to 2.5%. Now Coal India back towards the mark of 500, BPCL as well, and Power Grid trading with gains of 1.5%. The heavyweights are contributing to the index upside. Pull up the contributors as well, and you will see HDFC Bank, the top contributor on the Nifty to the upside, and it's around 32 points there. Reliance as well, the other contributor with around 20 points, and ICICI Bank as well. There you can see HDFC Bank, Reliance, ICICI, the top three contributors on the index. L&T chipping in with a handy contribution from itself as well. FMCG is the one that's taking a bit of a break, as Prashant was mentioning. HUL, Titan. That sudden shift that we saw towards FMCG last week seems to have been tapering off now, and those stocks are also coming off the highs that they had made last week. So overall, no reason to complain if you are a bull. The Nifty is at a record high, as is the mid-cap index. Most of the other indices are doing well. FMCG and Realty taking a bit of a breather. Well, let's get you an exclusive to start off the show. Sources are telling CNBC-TV18 that the auto industry has written to the government asking for a reduction of GST on CNG and flex fuel two-wheelers. Parikshit is here with more details. Parikshit, what do you have for us?
The Society of Indian Automobile Manufacturers has written to the Ministry of Heavy Industries requesting for a GST reduction from 28%, which is the base rate for all two-wheelers currently, to 18%, specifically for CNG and flex fuel two-wheelers. And when the base rate becomes 18%, to further reduce the GST on these kind of vehicles to 12%. This request has only been made for two-wheelers and specifically for CNG and flex fuel two-wheelers. There are companies in the auto industry such as the Hero MotoCorp, Bajaj Auto, and even TVS, which have developed or are developing CNG and flex fuel vehicles, which can run on higher blends of ethanol going up to E85. SIAM has also requested for a removal of 3% cess on all two-wheelers above 350cc. The reason why the industry body is urging the government to consider this request, because they feel that these low-carbon vehicles are good in terms of meeting our environment goals. They will also increase the overall two-wheeler penetration in the economy, increase productivity, considering that two-wheelers are used for e-commerce and quick commerce specifically. But if the tax rate remains 28%, then the cost of acquisition of CNG and flex fuel vehicles will remain high, because the vehicle efficiency, fuel efficiency of these vehicles goes down. And there is also a lot which has been invested by the companies in developing these vehicles. So you need to offset that investment as well. They have also argued that the tax rate in India, which is 28%, coupled with a road tax and also an insurance premium and 3% cess for vehicles above 350cc, is a lot of tax burden on a consumer, and this is much higher than economies like Thailand and Indonesia, which have a 7% to 11% tax rate respectively. So we need to bring the taxes down on CNG and flex fuel two-wheelers so that they are adopted more and bought more by consumers in the days to come. Now, this is a move that the Ministry of Heavy Industries can consider. They can make a proposal to the Ministry of Finance, but finally, this is an issue that will have to be taken up by the GST Council and decided by it.
Okay, all right. Parisha, thank you very much for that. So we'll keep on a close eye, and lots of these demands and sort of discussions will continue to take place in the coming weeks and months as well. You know, one of the names which is buzzing and doing very well is Sun TV. I think it's at a new 52-week high. But I mean, if you sort of extend that time frame a little longer, it's only now gone back to now this is Camlin Fine. I'm talking about Sun TV. It's only gone back to levels it was in October of 2018. Axis Capital has written a note on Sun TV this morning, and they've raised their price target of the stock. They're citing valuation comfort. Vamakshi is here with details. Vamakshi.
Well, absolutely. Sun TV has been performing quite well. In fact, it had dipped in the middle in 2024, but the stock has recovered since. In fact, in the month of June itself, the stock is up over 17%. Axis Capital says that Sun TV's ad growth was muted at 2% CAGR over FY22 to 24, but this is much better as compared to a nearly 4% decline that Zee saw in the same time period. Despite high competitive intensity, the market share in the Tamil language has remained stable for the company, but they've managed to lose significant share in Telugu, Kannada as well. Market share in newer markets of Bangla and Marathi have also remained low at 2 to 3%, but the company is targeting to foray into Hindi markets through Sun Neo, but scale up in content investments is expected to be gradual. Sports business is also seeing quite healthy EBITDA surge, and this is expected to sustain ahead. Given the company's improvement in their IPL performance as well, that is expected to aid the revenue as well as profitability in FY25 for the sports business of Sun TV. As far as valuations are concerned, Axis Capital believes that the valuations are rather inexpensive. There is also optionality that they see in share buyback or one-time dividend payout, as well as a possible demerger of its IPL or rather its sports business, which currently has an annuity-like EBITDA of almost 300 crores. And if materialized, this could potentially unlock value for the shareholders. Overall, they've gone ahead, maintained their ad rating, but revised their target price higher to 810 rupees per share. Overall, this bodes well for Sun TV. As a result, the stock is up in trade today.
Stock is up indeed, and it's doing well for itself. Vamakshi, thanks a lot for that update, and it's also extended its year-to-date gains now to around 11%. The stock has been relatively flat so far through the year as Sun TV, and it's finally now picking up through the IPL and now this target price hike that has come in from the brokerage as well. But the other stock that was in focus since the morning is HCL Tech, and that is because a couple of positive developments that took place in the stock through yesterday evening and this morning as well. Now, I'll start off with the deal that they signed yesterday evening, and that was with Deutsche Apotheker, which is Germany's largest cooperative private bank, primary bank that they have signed the deal with. Now, that deal is to enable fast and secured banking services for its clients, and that deal over a 7.5-year time frame is valued at around $278 million. So that is a positive development for HCL Tech. Now, the client that they have signed the deal with, Apo Bank, which is what is known as well, they have been a client with HCL Tech since 2021. So it's an expansion of the partnership that they already have together. And the other development that took place is that they have extended their partnership with Olympus, and under this partnership they are going to establish a dedicated product center in Hyderabad to manage the operations that they have for Olympus's operations, and this Hyderabad center will manage their operations across US, Europe, West Asia and Africa. So a couple of positive developments that have taken place in HCL Tech, and this also right after the Wipro deal that the company had won, which was around $500 million. Now, Morgan Stanley wrote a note on HCL Tech. They are overweight on the stock, a 1650 price target as well. Now, they said that this announcement is signifying two things. That the first thing is that there is continued large deal win momentum in the financial services space, the BFSI vertical, which is the largest vertical for most IT companies in the first quarter of FY25. And this significant expansion of an existing client relationship beyond just application to cloud as well as infrastructure services. So what they are saying is that because there is no sign of discretionary spending still picking up on the ground, such large deal win announcements is giving them comfort that HCL Tech will definitely meet its full year growth guidance for FY25, which is around 3 to 5% is what the company had guided for. As a result, the stock is up 1% in today's session, and over the last 12 months as well, it's been a relative outperformer when it compared to other IT companies as well. So it's around 30% over the last 12 months. So good going there for HCL Tech.
All right, well, that's interesting, Hormuz. Thanks very much for that. So almost 1450 on HCL Tech at this point. We'll take a break. Our first of the program. We are back. What's happening in commodity markets? My colleague Manisha will be here to tell us that. Stay tuned.
Back with us here on Trading Hour. Let's shift focus now to the commodity space, and Manisha Gupta is joining in as always. She has some important updates from the jewelry space where the government has imposed some import restrictions. Manisha, good morning.
Thank you for that, Hormuz. Yes, well, the government has a keen eye on jewelry and gold for sure, because even before the budget had happened in this year itself, we did see government increase import duty on findings in sense of gold because the markets were using that. Now, when you look at the number that what we have seen in sense of gold and jewelry coming into the country via the FTAs that the Indian government has with various less developed countries, the number is quite huge. Last year was 52 million, and then we've seen a 30% jump onto this one at 1550 million. I mean, this is quite unusual and really unusual in sense of last many years where we have seen gold jewelry being imported into the country is the reason DGFT has now restricted imports of jewelry and parts from many of these countries where we have an FTA agreement with. Well, there's an exception to this though, because there is imports from UAE under FTA which will continue to be allowed here. There also have been concerns, as I said, on imports of least developed countries, which is in that sense Indonesia and Tanzania. This is where we've seen the maximum number of increase or surge come in for. Now, this restriction has come in for 5 varieties. This is about gold jewelry with pearls, with studded diamonds and precious and semi-precious stones. So there are some HSN codes that the DGFT has provided on its notification where there are restrictions coming in. Well, the street has been anticipating this for some time because this has led to some disparity in sense of landed prices and the jewelry prices in sense of discounts in the country as well. So an immediate reaction, of course, for this can be seen into the markets.
All right, Manisha, thanks very much for that. Well, the big one from Wall Street later today, of course, is going to be the Federal Reserve's interest rate decision that is due tonight. Robert Sockin, global economist at Citi, now joins us to discuss what is likely. Robert, great to have you with us here. Thank you very much for your time. Now, it's well known that the Fed won't cut rates at this particular meeting. So in terms of watching out for, what are the key things? There will be a press conference addressed by Chair Powell as well.
So I think with this meeting, there is not a lot of uncertainty about the outcome. As you noted, the Fed is not going to cut rates. And the question really is about how dovish or hawkish do they lean into recent data. So I'm going to be watching a couple of things. One in particular, what happens with the Fed's dot plot. That's the guidance for, or the collective view of where rates are likely to head in coming quarters. I think that's likely to change to show 2 cuts this year rather than 3, which was in the previous forecast. It'd be very unlikely for it to stay 3. So the question is, if it moves to 2, which is very likely, what is the distribution of those views? And then the second thing I'll really be watching for is, how does Chair Powell express his views on the recent data in the press conference? Does he emphasize more the strength that we saw in payrolls recently? Does he emphasize the rise up in the unemployment rate, which has been more of a weakening signal? Or does he also emphasize on the inflation front, the improvement we've seen, or the stickiness on the services side? So there's a lot of ways that Chair Powell can take this, either hawkish or dovish.
Oh, which was my next question actually, Robert. How have you read the jobs data that you were just alluding to? Not just in terms of the number of jobs, even hourly wages rose at double the pace than what the market was expecting. Your thoughts on that?
My view, as someone who's spent a lot of time forecasting the labor market and following the universe of labor market data, is payrolls tends to be the best signal or one of the best signals of the health of the labor market. So I'm paying much more attention to the payrolls report than I am the household survey report, which tends to be much more volatile and tends to have more issues with measurement, and I think isn't properly capturing the large immigration flows that we're seeing in the US. So I'm less concerned about the tick up in the unemployment rate and the softness in the employment report on the household side. I'm more taken by the strength in payrolls, and I think it shows that the underlying economy remains resilient. Now, the other part of that, as you mentioned, is that wage growth was a bit stronger than expected. Some of that was probably due to some calendar effects within the report, where the reference period fell during that month tends to be a strong month for wage growth. But that being said, we're still seeing tight labor markets, high wage growth, and that's getting fed into still high services inflation. So I think the Fed is going to read it very similar to how I've been, that the labor market and the economy remain resilient, but they're still concerned that there's too much underlying pressure in wages and services prices to be comfortable that inflation is moving back to target. So I think that's very consistent with a Fed that's not going to be in a rush to cut rates and is going to be patient.
Robert, when do you see the first rate cut then? And how many in total? How many rate cuts?
You know, our US team, they're viewing the data as showing more softness. They think the economy is going to slow down more markedly as we go into the rest of this year. And that's going to lead the Fed to start cutting in December and then in September, and then continuing to cut throughout the year and into next year. So they're looking for the first cut in September, and then a continued path down from there. If, however, the economy is more resilient, which I think is potentially the message from the recent payrolls report, then you're going to see much slower and fewer cuts out of the Fed later this year and into next year. So it really comes down to how well does the labor market and the U.S. economy hold up. Our U.S. team thinks the first one's in September, and you get a market weakening throughout the year. But it's very reasonable to think that the economy is holding up better than that, and that's going to lead to a much more cautious and Fed that is not in a rush to cut rates.
Robert, what's the range that you're seeing for the 10-year US Treasury yields this year, and what's your view on the US dollar as well?
The 10-year, we think, is likely going to fall from here. Probably something into the high 3 range, maybe something around 3.9, just slightly below 4, or somewhere even near 4. That's kind of the range, I think, that we're looking at. But, you know, if the Fed stays higher for longer and you don't get those rapid rate cuts that our U.S. team is expecting, I think the 10-year can stay well above 4 for an extended period. So it's really going to depend on how much and how quickly the Fed cuts rates. Now, for the dollar, that's been very challenged as well, because in a higher for longer environment, the dollar is likely to stay stronger for longer as well. So overall, we have been looking, we do think the dollar is likely to cool against many currency pairs as the Fed starts to ease rates. But again, in this higher for longer world, I think you could see more dollar strength than you would expect if rates start to come down. So really, both of those questions hinge very crucially on what does the Fed do in coming months, and beyond that, how long do they stay at an elevated policy rate?
Robert, let's talk about local politics for a quick bit, right? So we've got NDA 3, same government is back. There is continuity in terms of ministers, etc. as well. Your take on what it means for the macros, because it's something very closely watched and much appreciated the way it's been managed over the last couple of years.
I had done some interviews around the India election, and I still think those hold up pretty well in terms of the view that you're probably going to get a government that is continuing with a lot of the pro-growth policies, as you noted, that we've seen put forward in in prior versions of this administration. And you'll probably see some adjustments at the margins, maybe some other social policies that you haven't seen in prior years. But also that will be coupled with a continued focus on other policies that support manufacturing, high-tech sectors. And so India has been one of the best performing economies in our forecast. We've recently marked up India growth. It continues to perform very well. So I think this is a very good situation for India, because I think you're going to get a continuation of a lot of those positive policies that you saw previously, but also some new positive policies that are going to support the economy more broadly. So overall, I think the Indian economy has been in a very strong place, especially relative to other emerging markets. And I think that is likely to continue and even broaden out as we go forward.
Robert Sorkin, pleasure as always. Thanks a lot for joining in and taking time out and sharing your views on the global macros and the road ahead as well. That was Robert Sorkin there sharing his views ahead of the big Fed decision later tonight. Time for a short break here on Trading Hour. Up next, we'll discuss market technicals. Mitesh Thakkar joins in and we'll also share his top trading bets. Stay tuned. Back with us here on Trading Hour, and the Nifty continues to remain at record highs, comfortably above the mark of 23,400 as of now, 150 points higher on the index. And what a recovery it has been, especially after the losses that the index had seen last Tuesday, when the entire market had seen a massive decline. The Nifty itself was down 6%. But since then, the benchmark indices and all the other indices as well have staged a very sharp recovery. There you can see from the 4th of June, the Nifty is up 7%. So it has recovered all the losses that it made on the 4th of June. The Nifty Bank is up 7% as well, still below the the levels that it needs to recover for all of its losses. But the mid cap and the small cap indices have outperformed, as they have all throughout the last 12 to 18 months. The mid cap index at a record high, up 10%, small cap index up 13%. The PSU index, though, the Nifty PSU, was down 16% last Tuesday, and it has managed to recover most of those losses. It's up 12% from the levels of the 4th of June. Now, all 50 stocks on the Nifty in the green from the 4th of June as well. So what are the top gainers? Well, PSUs are leading the recovery, so PSU is a gainer as well. On the top, ONGC up 17% since the 4th of June, the top Nifty gainer from that period. Tata Steel, Shriram Finance, there is no specific sector that has contributed to that recovery. It's been a broad-based recovery across all stocks. Adani Ports, NTPC as well. Some stocks that have not contributed, though, to this recovery is FMCG and consumer stocks. There you can see Asian Paints flat, HUL flat, Britannia relatively flat, up 2.5%. Divi's and Tata Consumer up 3 and 4% respectively. But within the PSUs, among the top gainers, BHEL is the top gainer there within the PSUs basket, 20% since the 4th of June. The PFC finds a mention as well. Remember, REC and PFC were the worst performers last Tuesday. Both were down close to 25%. So they are still reeling from those losses and recovering some of them. Concor, GAIL, some of the other stocks gaining anywhere between 15 to 20%. So the recovery is on within the PSU basket. Now, as I mentioned, the broader markets have been outperformers. So within the mid-cap space, it is the Aditya Birla Group stocks that have done very well. Vodafone Idea is the top performer there, 25% since the 4th of June. Aditya Birla Fashion continues to grow from strength to strength now after the spate of underperformance that it has had over the last 12 months, up 22%. Fact, just to ensure there's no float, barely any float actually in the market for Fact, it's up 22%. LIC Housing and Oracle Financial surging in today's session as well, is up 21%. Since then. And lastly, some of the gainers within the small cap space as well. HFCL, Tejas Networks, these communication based stocks have done well. Amara Raja, of course, for reasons differing to the recovery, the Andhra based stocks that have been on a tear. Amara Raja is one of them, as is NCC, both of them gaining anywhere between 27 to 25%, and Praj Industries as well among the outperformers. So overall, the recovery continues and the Nifty at a record high, as is the mid cap index as well.
No, absolutely. And Hormuz, it's a good-looking screen overall. Let's ask Mitesh what he would like to do, like viewers to do with the index and what it is doing. Mitesh, 125 points back up again. So is there a trade here on the index? And then we can talk about stocks.
Prashant, I think the index, as I said earlier as well, there is this breakout level of 23,008, 380, 390, and we're right there. So I think I'm waiting it out to see if we can sustain about that, get an hourly close. And once that happens, we'll look at higher levels. On the stock side, I have buy call because the overall bias on the market remains on the long side. So a buy on Astral with a stop at around 2,200 for targets of around 2,300 on the upside here. And the second call, Bajaj Finance, keep a stop at 71.25, look for targets of 74.20.
Interesting, Mitesh. Thanks a lot for joining in and sharing with us your index views as well as your bets on specific stocks as well there. Mitesh Thakkar there sharing his views on the index and some specific stock ideas as well, Bajaj Finance being one of them. But time for a short break here on Trading Hour. Up next, we get you excerpts from our conversation with Ridham Desai on his India outlook and his sectoral picks. Stay tuned.
Visuals coming in with this is of course the swearing in ceremony at Chandrababu Naidu and some leaders up on the stage as well. I think there is Prime Minister Modi and Amit Shah, the Home Minister, also there to support their ally Chandrababu Naidu, who's of course staged a resounding victory in Andhra Pradesh. So that's essentially what's coming through visuals. The Prime Minister, over the last couple of days, I mean, of course, we've seen union ministers take charge. Swearing in, of course, for the union cabinet happened on Sunday. And now we will see respective state allies and Chandrababu Naidu here in this case being sworn in as the next chief minister. So that's basically what's coming through. A lot of expectations, by the way, with regards to what Mr. Naidu can do. One of the big focus areas, not perhaps focus area, but one of the big talking points for a while has been, and our colleague Shilpa has focused on this quite a bit, is whether his long lost sort of ambition of turning Amravati into a world-class city, into the sort of new capital city, that perhaps will be put on the fast track once again. Mr. Naidu, of course, was instrumental back in the day in developing Hyderabad as a world-class city. Can he do something similar for Amravati? I think we can listen in now as he takes oath.
నేను నారా చంద్రబాబు నాయుడు అనే నేను శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతను కాపాడుతానని ఆంధ్రప్రదేశ్ రాష్ట్ర ముఖ్యమంత్రిగా నా కర్తవ్యాలను శ్రద్ధతో అంతఃకరణ శుద్ధితో నిర్వహిస్తానని భయం కానీ పక్షపాతం కానీ రాగద్వేషాలు కానీ లేకుండా రాజ్యాంగాన్ని శాసనాలను అనుసరించి ప్రజలందరికీ న్యాయం చేకూరుస్తానని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను. నేను నారా చంద్రబాబు నాయుడు అనే నేను ఆంధ్రప్రదేశ్ రాష్ట్ర ముఖ్యమంత్రిగా నా పరిశీలనకు వచ్చిన లేదా నాకు తెలియవచ్చిన ఏ విషయాన్ని నా కర్తవ్యాలను సక్రమంగా నిర్వహించేందుకు అవసరమైన మేరకు తప్ప ప్రత్యక్షంగా కానీ పరోక్షంగా కానీ ఏ వ్యక్తికి లేదా వ్యక్తులకు తెలియపరచనని లేదా వెల్లడించని దైవ సాక్షిగా ప్రమాణం చేస్తున్నాను.
Well, there you have it. Chandrababu Naidu sort of has taken the oath as the sort of new Chief Minister of Andhra Pradesh. And that is essentially the beauty of democracy, the beauty of electoral politics. Out in the wilderness till a few years ago and back in the saddle of the top seat as the next Chief Minister of Andhra Pradesh. So that's the ceremony going on. You could see, a plethora of leaders, top BJP leaders there to express their support for their key ally. Remember, Mr. Naidu, of course, won almost 80% of the total seats that he contested in Andhra Pradesh. TDP won 135 seats. That's actually exactly 77%. And the opposition to the TDP-led alliance was reduced to just 11 of the 175 seats in the state assembly. That is, of course, Kalyan there on stage with I think, let's just listen in actually to him as well.
Pavan Kalyan ane nenu శాసనం ద్వారా నిర్మితమైన భారత రాజ్యాంగం పట్ల నిజమైన విశ్వాసం విధేయత చూపుతానని భారతదేశ సార్వభౌమాధికారాన్ని సమగ్రతని కాపాడుతానని ఆంధ్రప్రదేశ్ రాష్ట్ర మంత్రిగా నా కర్తవ్యాలను శ్రద్ధతో అంతఃకరణ శుద్ధితో నిర్వహిస్తానని భయంగాని.
Okay, well, those are proceedings from Andhra Pradesh, and Mr. Naidu takes oath back in the saddle, as I said. So those are exciting times for the party and him of course, there. Well, 120 points, 23,400, just under that particular level as things stand right now, looking pretty solid. I think we're off the highs by a little bit, though. Market breadth is up 3:1 in favor of advances. On my screen, I can spot about 1,900 stocks up and about 660 odd stocks which are lower. Now, Morgan Stanley's Rhythm This High expects earnings here in India to compound at 20% over the next 3 to 4 years. We spoke with him in the morning on the sidelines of the Morgan Stanley India Investment Forum, the conference which kicked off today. He also spoke about his top sectoral bets, explained why global fund managers still remain underweight. He expects FIIs to return in full form in the second half of this year. Listen in.
With GEM's mandate, global emerging market mandates are slightly underweight India. So ideally they should have been overweight because India is persistently a big outperformer in an EM context. But obviously, they have been worried about valuations and therefore they've been waiting for the market to correct. And the market is not obliging, so they remain underweight. India's weight in EM has gone up significantly in the last 3 years. So, we were at around 8% pre-COVID, we're now 17%. And essentially, fund managers have not been able to keep pace with the rise in India's weight in the index. In fact, one of them asked me this question 3 days ago, that what would it take in terms of money flow for GEM's portfolios on average to be overweight India? The answer is a staggering $50 billion US. Now, the largest inflow that FPIs have put into India in a 12-month rolling period is about 35. So this is a lot of money for them to put. The third is a local reason. We have domestic inflows which just keep rising. Every morning, domestic mutual funds have to buy about $150 million of stock. If they don't buy for 5 or 6 days, suddenly they have close to $1 billion in cash and more work to do because the inflows don't stop. Now, in the market, there are only two cohorts. There are the domestic investors, and then there are the foreign investors. You can't get a trade unless both, if both are buying. You only get a trade if one is selling and one is buying. So obviously foreigners end up selling. This changes, in my view, as we go into the second half of this year, because the third cohort will get very active, which is the corporate issuer. So I expect a deluge of primary deals in the next several months, and that will then allow foreigners to start buying. So if I make a prediction here, it is that FPIs will start buying India in the second half. And it's largely because primary issuances will go up. So that creates the space for them to buy.
Hi, Rhythm. Good morning and good to see you in. Nigel on this side. Hopefully they come back in the second half of the year, as you told us, with good reason. But let's focus a little bit on the domestic money. That's been the savior, right? We're just scratching the surface in terms of the number of demat accounts as well. But what if there is some kind of curb that's put on the retail participation in the F&O market? Do you think it'll sour sentiment, or do you think the investor that's putting this SIP, the monthly numbers, is very different and it will not have much of an impact?
So Nigel, the SIP numbers have withstood a fair number of events over the last few years.
Yes.
And they only keep going up. See, the story started in 2015. When the Prime Minister allowed provident funds to invest in Indian equities. This was very similar to what had happened in America in 1980, when 401k plans were allowed by President Reagan to invest in equities. What you got then in the US was a 20-year bull run, which ended with the NASDAQ bubble. Domestic households in America were buyers all along the way, even during the 87 crash, when the Dow was down 22% in a single day. So they became very resilient. A similar thing is happening in India with two differences. One is the starting point of equity ownership on household balance sheet is very low. I estimate it's about 7-8%. It's gone up from, say, 5. So it's still only, it's still single digits. In the US, by the way, that number even today is about 40%. And then the second thing is the demographics. When we entered the millennium, America had already started aging. Baby boomers started retiring and they started withdrawing their equity saving. In India, that doesn't happen for the next 20, 30 years. So we have a lot of legs to go on this. And I think that at some point in time, it's quite possible that the limit on provident funds and NPS, which is currently pegged at 15% of incremental flows into equities, that could be raised to 25. The last 9 years have been very sweet for them. They've been able to deliver good returns to their subscribers, and it's largely because of the equity returns that they are getting. So I don't see the domestic bid going away on a structural basis. There could be cyclical ups and downs, but I think the structural bid is here to stay.
You did say that a lot of the money is on the sidelines because of valuation. So where is it that you find pockets of value, and where do you think things are overheated?
I see a lot of value in the market. I see value in many places. Just to highlight a few, I see that in private banks. I think we are in a very sweet cycle. Margins have troughed. Growth at the credit level remains quite robust. And the credit costs are not coming back in a hurry. And the stocks, I think, represent very good value. I see value in consumer discretionary, like autos, auto parts, retail, a slew of businesses that benefit from discretionary spends by consumers. I see some value in industrials, not all across the board. Industrials, I think, is probably the more tricky sector, because the growth there, I think, will be stupendous, but some stocks are trading at levels which may be discounting most of that growth. So we have to be careful about making a ubiquitous call on industrials. I see value in IT services. I think the US cycle is looking up, and IT services stocks look quite attractive. So there's a lot of value everywhere. Where there is, there's limited value, I think, is in consumer staples. I don't think those stocks have the same earnings upside that the rest of the consumption space has. So I would be a little cautious there. I think we have to be very selective in healthcare. Value is not there across the board. And likewise, I think in global commodities, we have to be a bit more cautious.
Right, Rhythm, things are looking up for India. We're in a bit of a Goldilocks scenario, which is great news. What are the risks then? Crude has been fairly well behaved, which is good for us, irrespective of how other commodities have flared up. A couple of risks that you'll be tracking, and a quick comment on crude being well behaved.
Yeah, so I think from a risk perspective, we have to be careful about global growth because India is trying to increase its engagement with the rest of the world. So if global growth doesn't fare well, it does put India back. I would worry about China's deflation because Chinese deflation creates greater competition for Indian companies trying to sell abroad. And that could be a very important threat. China's currency could be depreciating, which could make us less competitive versus China. I think we have to worry about the capacity constraints that we have. There's still a lot of supply side work that has to be done for us to sustain higher growth rates in the judiciary, in bureaucracy, in education, in skilling, in health. And on oil, actually, Nigel, the math has changed for India. See, the intensity of oil to GDP has halved in the last 6-7 years. So we are less sensitive to oil. But if oil went up $30-40 all of a sudden, then it would create near-term pain. But otherwise, I think oil is a lesser concern for us than in the past.
Rhythm Desai there in an exclusive conversation with CNBC-TV18. Time for a short break. Up next, we discuss market fundamentals with Devang Mehta of Spark Private Wealth Management. Stay tuned, back on the other side. Welcome back. Time for some fundamentals now on the market. Devang Mehta from Spark Private Wealth Management is joining us now, and he's with his market fundamental views and his top sectoral picks as well. Devang, good morning. Thanks a lot for joining in. What's your call on IT, Devang? I had to ask you this because Oracle Corp overnight posted very good set of results. That's reflecting in the share price of Oracle Financial as well. HCL Tech won a deal yesterday. Wipro won a deal recently as well. But the street still continues to believe that discretionary spending is not picking up on the ground. So is FY25 set to turn out to be yet another dull year for Indian IT?
Thanks for having me on the show. Good morning. I think, clearly what we feel is that this is one sector which had generally been a laggard. And what has happened to this market in this rally post-elections is that most of the sectors which were not doing well, they've also come back to the fore, be it domestic buying, be it a bit of a start of a FII buying, though it can't be said decisively that they are yet buying. But I think most of these businesses were sort of had a good correction, not only in terms of price, but also in terms of valuation. And with deal pipelines improving, with the commentary that we heard in the last quarter was not as pessimistic as during the last entire financial year. So my sense is that most of these stocks are right now at a valuation where they are sort of attractive buys or accumulate at least. I think large cap IT plus mid cap IT, if we see a bit of recovery in the Eurozone, we also see a bit of recovery in US, right? Again, the narrative has changed. If the inflation cools down, probably you are going to see 1 or 2 rate cuts during the year. So I think discretionary spends will tend to improve, but IT seems to be sort of a dark horse, which is now coming back into the reckoning.
Right. Devang, I wanted to ask you about the affordable housing push as well. You have mentioned housing is one of the sectors that you are positive on, and the stocks yesterday, all housing related stocks, be it cement, be it housing finance companies, or be it construction companies as well, all of them were surging. And how in yesterday's trading session, well, these are just plans, right? There is a push that they will build 3 crore houses, but who gets what? What is the share? Will the companies even get these orders? How much is the street pricing in terms of this kind of optimism that comes, whether it comes in stocks like HUDCO or even in housing finance companies like PNB Housing? What's your call on this?
Yeah, I think it's a very good question. See, I think market lost continuity of policies. And I think that the latest cheer in the market, the last 3-4 days, what we have seen is that almost the same ministers have come back, the same council of ministers or the same cabinet is now sort of formed. So mostly, I think the 100-day agenda, the 100-day plan, which is most important for most of the ministries, they are just starting from where they left, right? The important cabinet berths have gone to people who were already part of the top core 4-5 people have just been the same. So the sense one gets here is that housing / capital goods / infra / allied goods, power. I think most of these stories where they were left are still going to continue. Yes, you have to sort of differentiate the men from the boys, the housing finance, the affordable housing push, real estate already doing well, the commercial side doing well, even residential sales have generally been good. If you look at any of the listed builder, they talk about projects getting sold off. Even the building materials companies, most of them are coming up with good set of numbers. So some of them are expensive, but the numbers that you've seen from construction / real estate / infra and all this, even building material type of or home improvement companies have been good. So I don't see any sort of a conspiracy theory which should emerge in this sector. Over the next 2-3 years, all businesses should do well.
Interesting. And the other business that was the one that is going to get a lot of attention going forward is renewable energy as well, right? There are a lot of these wind turbine generators who have been winning orders left, right and center, be it the likes of Suzlon or Inox Wind. Suzlon, of course, being a turnaround story that it is turning out to be. Do you have a view on this space as a whole? And if you are at the liberty to comment on specific stocks, your views on stocks like Inox Wind and Suzlon as well?
I think yes, the space that you mentioned is one of our favorite in terms of not talking about individual stocks, but energy transition or sort of energy efficiency, productivity improvement. This is one sector which we have sort of liked. We also like power ancillaries. There are companies like Hitachi Energy, which has been our sort of top portfolio stock in most of our client portfolios. We also favor a lot of capital good companies like Siemens and all who work very closely with this type of sectors. There are also companies in the sectors like motion management, right? Most of the people talk about bearings, but there are companies in the motion management space, engineering space, which also work with a lot of this type of companies into energy transition. So my sense is that the entire space now, it's time that you don't buy everything and anything, but you have to be very selective when you talk about energy transition. As I talked about companies like Hitachi Energy, which specializes and has huge market shares. See, this size of the opportunity of this industry is huge. You have to find out companies which have good market share, the companies which have good margin of safety and which are sort of not trading at any it's not a story. There are numbers which are backing this.
Not a story, but numbers that are backing it. Interesting there, Devang. But I wanted to shift focus to metals, Devang, because metals have been pretty volatile over the last month and a half. The month of May throughout, we saw a sharp rally in most of the global commodity prices. Now they are seeing a bit of a cool off from those levels. On most occasions, metals are not more than just a tactical play or a trading opportunity. There has not been a broad long-term consensus over, okay, metals is the space to be in for the next 2, 3, 5 years. Is that view emerging now, Devang, or do you still continue to believe that it's just no more than a tactical play?
See, honestly, this time, I hate to say that, but this time it's sort of different because most of these metal companies have seen one good rise in demand. If you look at the next 2-3 year scenarios, maybe the global setup improves and there will be global demand as well as on the India side as well. I think there is going to be huge demand. So not only the realizations and prices have gone up, but also the profitability of these companies have sort of seen multifold growth. So it's not just a sort of a companies which have just run up on expectations, but it's run up with earnings as well. So the sense one gets here is you can keep a cautious view maybe, but still the rally seems to be not losing steam. There is still some upside left. It's sort of, though you can call it a tactical call, but this time it's got a more structural legs to it. And for the next 1.5-2 years, I think there's not much to worry on this front as well.
What about pharma, Devang? Because it's unlike a lot of other sectors which, okay, a housing finance company is known for housing finance, but pharma as a sector, there are so many different companies that specialize in so many different things. How do you differentiate among these pharma companies? Because you can't really paint the entire sector with one brush. Is there a space within pharma that you prefer, say the contract manufacturers or the ones that export more to the US markets? What's your view on that?
Yes, I think specifically we like the space, but as you rightly said, can't paint the entire sector with the same brush. So a couple of spaces that we like are MNC pharma companies like Abbott Laboratories, just not recommending, but just giving an idea of the portfolio holding that we sort of have. And we have this since many years. So there's a company Abbott Laboratories, which is mostly an MNC pharma company, which is not only a health company, but it's more a health tech company with excellent ROEs, ranging more than 35-40%, and company delivering EBITDA and PAT at levels which are sort of unbelievable. This company works with a negative working capital cycle. So again, a huge advantage with free cash flow. So these are companies one should sort of take care. There is another innovator, which is a very small company like a Gufic Bioscience, which can't be also termed as a pure play pharma, but gets into a lot of innovation mode, and 4-5 products probably right now, which are finding excellent space in the new world, which is more an innovator space rather than a normal pharma type of a company. So I think this type of bets are very core type of companies is where we set our sights onto, rather than getting into anything and everything in pharma.
All right, Devang, we leave it at that. Thanks a lot for joining in and sparing time to share your views on the sectors in the market. That was Devang Mehta there of Spark. That is a wrap on this edition of Trading Hour. From Prashant, me and the team that put this show together, thank you so much for watching. Halftime Report takes the action forward.